I'm Dr. Cheryl Dunn, and I'm here to demonstrate an introductory financial accounting problem in which we're given information about a company's insurance policy purchases, and we need to make an adjusting entry for insurance expense. So take a minute to look at the problem. Okay, so it says Beetle Blue paid insurance of $42,000 for a year in advance. Or we can think of that as 12 months. If we divide 42,000 by 12, that gives us $3,500 per month. It says that Beetle Blue makes annual financial statements on December 31st of each year, and so we want to know what adjusting entry we should make on December 31st of this year. It also tells us that when they purchased this insurance policy was on September 1st. And so that means from September 1st to December 31st, 4 months have passed. So if we then multiply the monthly insurance cost by the 4 months that have passed, that means we have $14,000 of that policy that has been used up. That's the amount that we want to represent our insurance expense, because that's the portion that no longer is an asset. Instead, it's a cost that has expired, and that therefore that is insurance expense. The remainder of that $42,000 that we paid still has value beyond December 31st. It's going to last from January 1st to August 31st of the following year. And so there's 8 months worth of expense that is really still an asset. And so that's going to remain in the asset account. If we think about what the prepaid insurance asset account looks like versus the insurance expense, we would see that our unadjusted balance was $42,000. Once we record this entry for expense, it would look like this. To record an expense or increase an expense, we debit it because expense accounts have debit balances as their normal balance. To reduce an asset value, we credit it because they normally have debit balances. When we post this journal entry then, we would post the $14,000 debit to insurance expense, and then we would post the $14,000 credit to prepaid insurance. That would then leave us with a prepaid insurance balance of $28,000, which does represent $3,500 times 8. And so that is the remaining benefit that the company has available to it from what it had paid back when it bought the policy originally. And so it makes sense that this is the balance we want to be our asset balance, and this is the amount of expense that we incurred during the current year. So that's how you make the adjusting journal entry for the insurance expense. Sometimes homework or exam questions will be trying to test your critical thinking and not just your mechanical ability. And so instead of just asking for the adjusting entry like you would show here, or instead of just asking for the ending balance of the prepaid insurance asset, or the amount of insurance expense that should be recorded on your income statement, they'll say things like, what would be the effect on the company's financial statements if they neglect to make this adjusting entry? And so then they're looking to have you say things like, oh, if we neglected to make that entry, then instead of showing $28,000 as our prepaid insurance balance, we would be showing $42,000 as our prepaid insurance balance. That means we would be overstating our assets. In other words, we would be showing an asset value that's too high. Or if they wanted the effect on income, we would say, oh, if we didn't make that entry, we would not have recorded any insurance expense at all. Our insurance expense would be 0 instead of $14,000. That means if our expenses are too low, and we know that revenue minus expenses equals net income, if the expenses are too low, then that means the net income number is too high. And so we would say that our net income is overstated if we fail to make this adjusting journal entry. So that's just an extra tidbit for you. And thank you for viewing this demonstration. I hope you found it helpful.